I've noticed something over the past few years. More people than ever are afraid of a financial collapse. They feel it in the air. They see it in the news. They hear it in conversations at work, at dinner, online. Markets are volatile, prices are high, debt is everywhere, and trust feels fragile. So people ask the same question over and over. Is everything about to fall apart? Let me tell you something important. Fear of financial collapse is not new. It's as old as money itself. I've lived through recessions, market crashes, oil crises, inflation shocks, wars, bank failures. Every time, people were convinced this time is different. This time the system won't survive. And yet the system did survive. Not without pain, not without losers, but it survived. Here's the first truth most people miss. Financial collapses do not destroy everyone equally. They don't wipe out society. They rearrange it. Some people lose everything. Others quietly build fortunes. And most people don't realize which group they belong to until it's too late. The people who suffer most in times of crisis are not the poorest. They're not even the middle class. They are the people who believed stability was guaranteed. The people who assumed tomorrow would look like yesterday. The people who never prepared because things have always worked out. Collapse punishes complacency far more than bad luck. Because here's the uncomfortable truth. If a financial collapse happens, panic will not save you. Predictions will not save you. Doom scrolling will not save you. Preparation will. And preparation is not complicated. It doesn't require perfect timing. It doesn't require secret information. It doesn't require guessing when the collapse will happen. It requires positioning yourself so that no single outcome can destroy you. People who survive financial turmoil tend to share a few traits. They don't rely on one income source. They don't keep all their wealth in cash. They don't panic sell productive assets. And they don't confuse volatility with permanent loss. They understand the difference between noise and reality. Here's something else most people get wrong. They think safety means avoiding risk. It doesn't. Safety comes from understanding risk, from spreading it, from owning assets that adapt instead of break. Cash feels safe until inflation eats it. Businesses adapt. They raise prices. They cut costs. They innovate. That's why, historically, ownership in productive assets survives collapses far better than fear-based hoarding. Not because it's comfortable, but because it's resilient. Now, let me say something that might sound harsh, but it's true. If a financial collapse scares you to the point of paralysis, then your financial foundation was already weak. The collapse didn't create the problem. It revealed it. That's not an insult. It's an opportunity. Because revealed weaknesses can be fixed. Ignored ones cannot. So what should you actually do in times like this? You simplify. You reduce unnecessary debt. You stop chasing appearances. You build buffers. You invest thoughtfully, not emotionally. And you focus on skills and adaptability, not predictions. You stop trying to guess the future and start preparing for multiple versions of it. Every generation believes it is living on the edge of collapse. Some are right, most are early. But the people who come out stronger all do the same thing. They don't panic, they don't freeze, and they don't wait for certainty. They act while others are distracted by fear.